You ready? Yeah, you got me running, you got me running, got me running. Shake it, shake it, shake it, shake that. Raise your hands up, raise them up.
All right, good morning, everyone, and welcome to today's currency call. This is the Forex Trading Asia Daily Currency Call, episode 350 for the 6th of August, 2021. It is just past 11 a.m. here, GMT +8. And if it is your first time here, a big welcome. We do the currency call every Monday to Friday at 11 a.m. And the currencies we analyze are as follows: Aussie and Kiwi on Monday, Tuesday, Euro, Wednesday, the pound, Thursday, yen and gold. And then today, Friday, we have the CAD pairs and crypto. So this is the currency call where you will get market economic updates, key support and resistance levels, trade ideas and more. Now, the currency call is going to be very beneficial to both the long-term investors and also the short-term traders. Here we will be going through what could move prices, possible trade ideas, and also highlighting possible targets as well as risks. Also a disclaimer, any information shared during the session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. So first up, guys, today we have Kim Hong, who will be talking about the post Bank of England and also the RBA Governor Philip Lowe's testimony that happened earlier today. So over to you, Kim Hong.
All right, thank you, Scott. Okay, happy Friday, everyone. So, okay, if you guys haven't looked at the chart, just don't bother looking at the pound chart and things like that, because it was like all over the place yesterday, okay? So, what basically went down yesterday was, as usual, as expected, okay, they held policy unchanged, okay? So interest rate was held at 0.1%, okay? QE will continue to be purchased. Well, the total amount of QE, okay, bond purchases will still remain the same at 895 billion pounds in total, okay? Now, first thing to take note of is the voting, okay? Of course, as of right now, interest rate votes from the committee members, okay, we pretty much expect that everyone will actually vote for interest rate to remain the same, okay? That is as expected. So we get 8 participants voting for no change in interest rates, okay? Now, over to the QE vote, okay? One member, okay, I would say the hawkish committee member of the BOE, okay, Michael Saunders, okay, actually voted for a reduce in government bonds purchased by 45 billion pounds, okay? But of course, one person voting a reduction in QE will not have a big impact, okay? Because the other 7 members actually voted QE to be unchanged. So hence, there isn't any change in QE, okay? So that's it for the voting part. Now, I think the more interesting part will be the economic projections. Okay, let's just dive in straight into the report, which is where the economic projections can be found. All right. So what you're looking at right now is the super lengthy report that I don't recommend you guys to actually go through. I mean, you can go through if you want, but it's very lengthy. Like for me, I'll just skim through it and look for the key points. So right now, what I'm going to show you is the just scroll through. Yes, the key point of the report. So what you're looking at right now is the Bank of England's committee members' forecast, okay, projection for the economic indicators, for the 3 major economic indicators, okay? So the first thing here we can see, okay, world GDP, I'll just skip it, okay? It's not as significant as the other 3 that I'll be going through, all right? The first one will be the GDP. So we can see that over here for 2021, okay, this year, GDP projection remains unchanged, so Previously it was 7.25%. Right now it's still the same. Okay. But for 2022, however, okay, the central bank actually sees an I would say an increase in economic activities, okay, leading to a economic growth, which is why we see that there's an upwards revision in GDP from the previous 5.75% to 6% over here, okay? And then for 2023, there's a slight increase, there's a slight upwards revision as well from 1.25 to 1.5%, okay? So that's it for GDP, you know, a slight, I would say, upwards increase, a slight positive increase, okay? Now, unemployment rate. Let me look at it. Okay, so this is 2021, unemployment rate. Okay, unemployment rate for 2021 has been revised downwards, okay, from the previous 5% to 4.75%, which is actually good, right? For 2022, same thing, all right, it actually was revised down from 4.5 to 4.25%. Now, if you guys remember that I was mentioning something about the whole furlough program, you know, back in, I think, back on Wednesday. Yeah, Wednesday when I was giving you guys the prep for the BOE. Okay, so the Bank of England actually feels that the ending of the furlough program in late September, okay, will not actually have a big impact on unemployment rate, meaning unemployment is unlikely going to rise, okay, once the furlough program ends. So the reason they gave was because the number of furlough jobs has declined, okay, over these few months. Furlough jobs meaning, okay, so when a person goes into furlough, okay, so he or she is basically taking a granted leave of absence, okay, from his or her job, all right? So the number of people, okay, number of people who actually take up this whole furlough thing has declined over the past few months, okay, which explains why once the whole furlough scheme ends, the wage subsidy scheme ends in September, okay, it's unlikely going to have a big impact on you know, the rise in unemployment, or rather should I say unlikely going to have a big impact on unemployment rate, okay, which is a good thing, you know, if it actually is as expected as by the central bank, okay. So which is why we are seeing you know, a downwards revision in unemployment rate for this year and next year, okay. So that's for the unemployment rate. Inflation. Oh yeah, inflation pretty much as expected. Okay, they actually did a revision, upwards revision to the inflation expectation for this year. Okay, projected to be 4%. Okay, as opposed, or I should say as opposed to the previous expectation of 2.5%. Okay. For next year, okay, inflation is still expected to rise as well from 2 to 2.5%. Okay. So overall, I would say that this economic projection is quite positive, all right? It actually shows the optimistic outlook that the central bank presents, okay, on the UK economic outlook. It doesn't really seem that they are that worried about the whole Delta variant, okay? Like I mentioned previously, you know, the Federal Reserve and the RBA, the Reserve Bank of Australia, both central banks actually deem that, you know, the negative impact that may be caused by the whole spike of COVID cases is unlikely going to be big. It's unlikely going to be significant. Okay, so which is what, you know, I believe that's what the BOE is adopting as well. You know, the view. Now that's for the economic projections. What about QE? You guys may be wondering. So basically, you know, there's no change in QE tapering and things like that. All right, there's little discussion on that. So for what it's worth, they actually mentioned that the central bank will start to reduce the stock of bonds purchases. So you see, when they do QE, they're actually purchasing bonds and other financial securities, right? So eventually, the central bank will have to unload all these bonds that they have purchased, right? Meaning to sell them back to the market. Okay. So when are they going to do it? That's the key. Okay. So they actually mentioned that they will actually consider, okay, selling back all these bonds purchases only when interest rate reaches 0.5%. Okay, 0.5%. Previously, I think it was back in June 2018. Okay, they actually forecast that they will sell back these bonds purchases, okay, only when interest rate was at 1.5%, okay, were to rise to 1.5%. So right now they actually lower the standard, okay, and they will start to sell back, these whole bonds that they purchased actively, okay, meaning at a faster pace, only when interest rate reaches 1%. Okay, so let me with this whole I would say what do you call it? Selling back of bonds when interest rate reach a certain level. Let me just show you guys the central bank's forecast for their interest rates. Let me see if I can find it here. Page 10. This is the one. Oh no, not this one. Okay, you know what? I'm just not going to waste time skimming through this whole policy report. All right. So I looked at the report earlier on, and they are actually expecting. Okay, the central bank is actually projecting. Okay, the Bank of England's interest rate to be to hit 0.2% by Q3. Okay, the third quarter of 2022, which is next year. Okay, which is actually quite early, to be honest. Okay, and interest rate will hit 0.4% by Q3 of 2023, and it will hit 0.5% in Q3, okay, by Q3 of 2024. So what this means is that the central bank, okay, if the forecast actually turns out to be true, okay, then we will only be seeing the central bank, the Bank of England, be selling back their bonds only, probably in late 2024 or something like that, So yeah, so that's how they actually that's their planning for right now, okay, like as to the whole quantitative easing issue, okay, no change in quantitative easing, okay, no tapering was carried out, okay, no tapering was discussed, and actually one more point is that they are expecting the whole bond purchase. So I think as of August, okay, they have not purchased the full sum of 895 billion pounds of bonds, okay, but they are actually expecting the whole complete bond purchase to be done by the end of this year. Okay, so yeah, like I said, it's very uneventful for them to actually, well, it's actually non-eventful, to be honest, coming from this Bank of England, because they have not been doing much on QE, much discussion on QE and things like that. Okay, and the information that they provided us from yesterday is not giving us I would say a clear direction as to whether pound will be going up, should be strengthening, or should be weakening. Okay, nonetheless, we'll just wait for the next meeting and see how it goes. All right, the next meeting will be held, I think, in September. Okay, then yeah, we'll see where it goes from now for the Bank of England. Okay, now with that, I will move over to the RBA's Governor Low's testimony earlier on today. Okay, so what you're looking at right now is the statement that was released, the speech that the Governor Low actually gave out earlier on today. All right, let me just go straight to the point. All right, there's only one major, I would say a couple of major points to look at. So remember that at that time previously I was mentioning that we want to pay attention to Governor's Low explanation, okay, on why the Reserve Bank of Australia is still I would say, proceeding with the plan of QE tapering, okay, despite the recent whole spike in cases in Australia, okay. So over here, he said that, we considered the case for delaying this tapering to 4 billion a week. So they actually did consider, okay, holding back. But however, the critical issue here is the outlook for the economy, okay, as I discussed earlier, we are expecting a return to strong growth next year. So the central bank is actually very optimistic, I would say, you know, in terms of, I would say, economic recovery. So like I mentioned on Wednesday, you know, this whole impact of COVID cases rising that will have on the economic recovery is unlikely going to be that impactful, that significant, okay, as the government of the rest of the corresponding countries start to, you know, get better at handling this whole COVID issues and things like that, okay? So it becomes like, I would say, a growing confidence, okay, in the central bank, in the economic rebound, economic recovery, which is why, you know, RBA is still going to proceed with the plan of QE tapering in September, okay, when the current round of QE ends. Okay, so with that, all right, yes, another point that I would like to point out, which is, yeah, over here. That what I mentioned previously was for QE. Right now, for interest rates, okay, the board will not be increasing the cash rate until inflation is sustainably in the 2 to 3% range, okay? So that is pretty much like a 2024. Okay, under the central scenario, the condition we have set for an increase in cash rate is not expected to be met before 2024. Okay, now, so you guys might be wondering, right, 2 to 3%, when will it actually be hit? Okay, so earlier on today, which is after the Governor Low's testimony, the RBA actually released the monetary policy report, the quarterly report, which actually contains the economic projections. All right, so let me just show you guys the, once again, this report is not recommended to, you know, for you guys to read because it's super lengthy, you know. Okay, let's just go straight to the forecast. Okay, so inflation of 2 to 3%. Okay, when will it be met? 2021, year ended December 2021. Okay, so previously, I think it was back in June. Yeah, June or May. The previous release of the forecast, they were actually expecting 1.75%, okay, inflation for 2021 to be 1.75%, but it has since been revised up to 2.5%, which is a good thing, right? Within the central bank's target. Now, for next year, 2022, okay, it falls short, okay? Okay, there was a upwards revision from 1.5% to 1.75%, okay, but it's still, you know, below the central bank's target. Then for 2023, there wasn't a previous revision, okay, because this year, this 2023, the year of 2023 ended in December, okay, it's actually a newly added data point, okay. So right now, this time round, they're actually expecting a 2.25% increase for the year 2023, okay. So we see that, you know, inflation is like, you know, on and off within the central bank's target, which is why, you know, Governor Low says that, you know, unlikely we're going to see this whole condition be met before 2024. Hence, interest rate, the consideration of a hike in interest rate will only take place probably in, I don't know, early 2024, you know, provided that the target, inflation target will be met, okay? So that is for the inflation. And they also highlighted that, you know, just like other central banks, you know, that the recent rise in inflation is just transitory, is temporary. So we'll see how it goes from there. And with that, you know, we can move on to the other economic indicators, okay, like the GDP. GDP, as well, actually, this is pretty much expected, okay? They revised the GDP for 2021 from 4.75% to 4%, okay? Because of the recent increase in cases, which Governor Low already highlighted that, you know, during the RBA meeting, that is going to have an impact, negative impact on economic growth, okay, during the third quarter of 2021. Hence, the downwards revision for the whole year, okay? However, okay, he also mentioned that for 2022, economic growth will come back strongly, okay, which is why we see an upwards revision from 3.5% to 4.25% for the year 2022, okay. And then for 2023, as usual, the there wasn't any previous forecast, but yeah, for this time around, I think they are forecasting a 2.5% for 2023. Okay, now that is for the GDP. Okay, for unemployment rate, where is it? Over here. For this year, okay, they are not expecting a change in the unemployment rate, which they actually forecast it to be 5%. Okay, however, for next year onwards, okay, there is actually for next year specifically, okay, there is a revised downwards from 4.5% to 4.25%, which is a positive revision. Okay, then for 2023, as usual, there's no previous data point, and they're actually expecting it to be 4% right now. So overall, I would say that we are actually seeing a I would say a positive revision, okay, in the central bank's projection for the economic indicators. Okay, so that's pretty much what I have for you guys right now. Okay, so we just have to look forward to the next RBA meeting, which will be held probably in early September, and see how it goes from there. Of course, unlikely there's going to be any change in the plans that the RBA has set down in terms of QE tapering that will be taking place in September. Okay, so wow, if there's any changes, any new changes and things like that, I will update you guys. If not, yeah, we can just look forward to QE tapering in early September. Okay, when the current round ends. All right. Yeah, with that, I'll hand it back to Scott.
All right, thank you, Kim Hong, for the intensive detail as well. And I hope everyone, guys, just if you have to rewatch it, please do, because it's very helpful to understand how to sort of position yourself as well, if you've got some more longer term positions as well. So what I'll be doing, guys, is going through the US dollar. So I've just noticed on the hourly that we've sort of poked a little bit higher, and we're currently just over 92.30 here as well, which is definitely a point of interest in the lead up to tonight. And what I will do is let's just go to the news as a refresher, just to focus on, what happened last night and then what is happening tonight as well. So we did have, it wasn't a big news day for the US yesterday. We had the initial jobless claims, which, are a week-to-week figure, and we saw it come in at 385,000, which was just slightly higher than expected at 384. But to be honest, what we are looking is, and you can see it in the price action that I just showed, there's some sort of anticipatory reaction here with the price action. So we've got the non-farm payrolls, participation rate. There's about 6 events all coming out at 8:30. So I'll go back to the charts now. And what I'm looking at, guys, is the fact that, it's going to be quite tough to, see the NFP, well over 870, just with everything that's been going on. I do anticipate that it's going to be close. And, frankly, it's already moved quite a lot. So the ideal entry, like I talked about yesterday, would have been when it pulled back. So what hopefully happens is that it continues sideways, and that, carefully watch, and then after around 30 minutes after the release, just see what happens. Because as we saw with the pound release as well, was mentioned in the Traders Club yesterday in EchoFin, we saw a lot of volatility. So don't get in, just straight after the news or even just before. Just leave it and then see what happens. So my thoughts are wait till around 9 o'clock tonight and then see what opportunities are there after that. But those are my thoughts, guys, on the US dollar. Now, to Daniel, who will go through the Canadian pairs and also cryptocurrency as well.
Okay, thank you very much, Andrew, Scott Andrew. So yeah, exactly. So Scott Andrew has mentioned a little bit as well. So let's go to the charts today for Canadian dollar. Let's go straight to the charts and see what's happening here, right? So for Canadian dollar today is a Friday, right? So today, if we look at Canadian dollar, it is at a coincide the same time, the employment change and the full employment, the participant rate, the unemployment rate. These two critical numbers are coming at the same time as usual with the NFP numbers. But nevertheless, we can take a look with that. Now you can see employment change. It actually from a strong 230.7K last June. Okay, last June. Then this July, it most likely coming at 177.5K. It is a slower growth. Okay, it is a slower growth, but nevertheless, it's still a good growth coming in. And with this kind of employment change, you can see here. So you can see the unemployment rate would drop from 7.8% down to 7.4%. Now this will be pretty good, but nevertheless, I wouldn't advise you to be looking at US CAD to be trading. That because the US dollar at the same time having a trade, unless of course you can see one good number, one bad number, and you know which one to trade. Else you probably be looking for a Canadian pair that's non-US pair related, and could be looking at this trade. Now looking at these numbers here, we could be, if you look at very simply, if you're looking at a positive number, much higher, if you're going to surprise a number, employment change going to be about 200, above 200K, then which cause the unemployment rate to drop even further, then I would say the Canadian dollar could strengthen, and then resulting in upward well, a CAD, if you look at CAD yen, you will be looking at upward trend. We'll look a bit more coming in later. But then we also, like Scott has mentioned, about the non-farm payroll. Now, it's going to be quite critical. I'm also going to be talking a little bit quickly about this. Now, three critical components that you should be looking at for the non-farm payroll would be the average hourly earnings month per month here. You should be looking at the non-farm payroll numbers here, which last month is 850K. They are projected at 870K coming in here, and most importantly as well is the average weekly hourly earnings here. Okay, so this is one, payroll two, and where is the the unemployment rate here is 5.7. So you can see that unemployment rate is going down if provided the forecast is the jobs is coming in. So but bear in mind of it, for members here, I think if possible in the afternoon, I'll try to do a quick summary of what to look out for you to trade the non-farm payroll. Okay, so now with that, let me go to the charts here. For the US, for the US CAD coming in, it's pretty interesting. I mean, last night, based on the oil prices coming in, if I go into WTI coming in, there was such a oil price, it went up, right? It went up here, slightly moving upward direction, causing Canadian dollar to strengthen. US CAD to strengthen coming down, and then today, with anticipation, I firmly believe right now with the anticipation of the non-farm payroll and employment change for Canadian dollar, that's where the reset comes in, and it's going to hold on. So most likely, I would suggest, for today, you're going to skip the US CAD because it's going to move across. And only after the news comes out, would you be looking for a trade. Now, if you look for a very bad, it was a bad US CAD and a good CAD, bad non-farm payroll from the US side, and a good Canadian job reports, then of course you'll be looking for a continuation of a downward trend, and vice versa. But if not, if both is good or both is bad, I would advise you not to be looking at the US CAD because you can't really see which is stronger and weaker, and it all depends on the marketplace. Very difficult to see the direction, so I wouldn't advise you to look at that US CAD trade. Now, if you're just looking at you're interested, like I know one of our members here loves Canadian dollars, you could look at the CAD yen. Okay, now for CAD yen, if you're going to have good numbers, as mentioned, that the forecast is right now is 177.5K. If it comes out of like 200, right, 200K or even 230K, beating a previous month coming in, which will bring the jobless rates down from a 7.8% to a 7.3% and even lower, then I would firmly believe that you will break out of this resistance zone for CAD yen, and if it breaks above 88.4, you could possibly be looking for a possible buy trade at that point in time. Now, what we'll be looking at today, Friday, would be a short-term trade. You know, I'll be looking at, you see these zones here that I've drawn is actually a quite reactional zones here. So I will probably be looking at, you know, trading, coming a very tight stop loss, like almost like 30 pips of stop loss for going for a 60 pips take profit target. However, it's a Friday, remember, and this news can react very fast before it reach to an equilibrium. So look at the trade. If you do take this trade here, do look for a short-term trade, maybe on by Friday evenings, GMT +8. You know, by the time the news comes out, do and you have a profit, do secure your profits here. Okay, that's for the CAD yen and US CAD. Now we look at for the cryptocurrencies, really very interesting right now. It got me really excited this week, right? I mean, Bitcoin and all the cryptocurrencies has been on the upward trend. You know, this whole week moving and move upwards, break the 40,000 range. It did exactly what I think it will be when I talked about last Friday, that it will comes down. It came down before it goes and before a retraction, because this is a profit taking, and before it moves up, it did that, and now it did that. Now my question I'm looking at is, does it have the momentum and does it have the bias, right, to push all the way past the 45,000 range? Now I'm just waiting for this setup to happen. If it is possible, if it's going in, you see a strong momentum coming in, you could see that happening as well. Right now it's just a wait and see, because right now after the big push upwards here, retracement and coming back upwards again, I see a little bit loss in momentum in the Bitcoin. Now right now it could be a bias. The whales are not really buying it, waiting to go for it, but I firmly believe, looking at just the analysis alone, it most likely will move up. So let me change this here. I think it will move up. So wait for it to move upwards. I'll be very interested to be looking for a buy trade. If it moves above higher, you see a bullish pattern on Monday and Tuesday, or even the weekend, you know, because cryptos you can trade over the weekend. Even the weekend you see a bullish candles coming up, then there could be a possible continuation of movements upwards. I would say, you know, firmly looking at it, it's like 41,500. If it breaks above that, or even let's be a bit conservative here. First thing, look at it above 42,000. Okay, 42,000. If it breaks above 42,000, your first target would be going towards the 45,000 range. And if it breaks, okay, so let me put it closer here, 42,000 range. And then if it really breaks the 45,000, yes, then I think it will be a very nice confirmed momentum moving outwards towards a possible, let's go for a quick trade, a previous high here at about 58,000 range. So I'm a bit more bullish for the week coming in for the Bitcoin. Now looking at Ether really excited. It didn't drop back down because it did move past the 2,500 range. It did comes back down towards the 2,300 range as expected. It did come back, and really very nicely, you can see here, let me zoom it in further. You can see at 2,500 range, it rejected. Again, confirmation of a strong support level here at the 2,500 range, and now it is moving upwards here. So looking really good here. Of course, we have heard news about Ether 2.0. Right, where they will start to, when you start to use Ether, they will burn some coins as well. So moving forward, there seems to be a pretty positive statements, and NFT is coming, non-fungible token also seems to be picking momentum. News where like even big companies like Marvel are putting their superheroes up to sold for NFT. So really very nice coming in, and I'm looking at it really a bit more bullish for the coming week. Ahead, I think looking ahead here, if it goes above, you know, close above for the day today or the weekend, close above the 2,800 level. Okay, so you can see here this level here, you know, above here about 2,800 level here, about 2,836 to be more exact, 2,850. Let's say look at 2,850, a round number where a lot of retailers see it, 2,850. If it breaks above there, then I think there will continuation of momentum all the way to about 3,300 level or even 3,000 level. So it's really nice trade if you're trading the cryptocurrencies for Ether. this is what I'll be expecting to be going up and move slowly, moving up the trend. Okay, so we are waiting for a possible reversal coming in. Really very nice. You can see on the daily chart why I say that, you can see the double top bottom now has been formed, and that's why I say it's break above the neckline already around 2,500 range, and that's why I also think that based on technical analysis here, it is about 1,700 levels here. So maybe moving about 1,700 level, waiting for it to break. Really very nice above the 3,000 range, and I think we can possibly moving all the way to 3,300 level range. So that's what I have for Ether. But you will cryptocurrency, it is volatile, so trade well, trade safe. These are all my opinions, so please be careful in your trading. God.
All right, thank you, Daniel. And look, guys, lots of great ideas were shared there as well. So I did notice in the poll that quite a few people weren't invested with Forex Briefcase as well. If you are looking to learn more about that, just visit the website, forexbriefcase.com, or feel free to get in touch with any one of us as well. Now, also, we touched upon the LCMS Traders Club as well, and Daniel was talking about sharing some insights into how to trade NFP and what exactly to look out for. So I'll just get Daniel to quickly go through what LCMS Traders Club is in a few short minutes. Thanks, Daniel.
Okay, I'll be glad, Scott. So again, LCMS Traders Club, it is LCMS Traders. We started 2014, have a lot of traders here. So we introduced the LCMS Traders Club and our dedicated platform just for all the members to build a Forex community for anyone who's serious about being profitable in trading. So I just want to share with you a quick sharing of our platform. Okay, on our platform here, we host a community of traders sharing ideas, strategy ideas, analysis, monitoring the market, coming in. It's really as if it's a professional trading firm, the community here sharing information and ideas. You could see Scott giving you lots of morning updates at what's happening here. You could see that I give you updates on the sell trade ideas, or US CAD last night, giving a sell trade idea, putting in here. We have a member here telling me, hey, huge spike, be careful, after the Bank of England monetary statements, and many, many more looking in it here. We also have the market watch list here, where we give every morning the analysis team in LCMS Traders will be looking at what's the market happening last week, yesterday, and what's coming today, and what to be expecting for, what kind of directions we're looking at. For example, you can look at here at the currency watch list, what kind of currency pair, sell, entry, and a potential profit targets. Really very good. And everything here. Not only that, we have a Monday and Wednesdays. Monday we have a group coaching sessions, and Wednesday we have a live training sessions, all for beneficial for the members club here to benefit and be profitable in trading. Now, one of the things I would like to highlight here as well is that in LCMS Traders Club, we have a competition every month. You can see every month we have a competition where you can come in and look for a trade to trade, and then earn money, profit possible as well. You could earn about the first prize, if I remember correctly, it was USD $2,000 if you trade and be profitable. So really very nice trading coming in. So we have lots of information, and you can be profitable in your Forex trading. And while you trade, you can earn through competition or your own profits. Now, how do you get to this club membership here? Really very simple. This is, for you to join here, this is without a doubt the least you must do, to achieve your best in trading. Now, it's only USD $49 a month, but we have lots of members coming in and benefiting more already. They recover the $49 a month every month, being profitable in their trading. So all you need to do is click on this button, fill up your particulars here, click submit, and I'll see you in the club.
All right, thank you very much, Daniel, and thanks everyone for joining us as well. Hope everyone has a great weekend and trade safe tonight as well, and catch everyone on Monday for the Aussie and Kiwi analysis. Thanks, guys.